Hello students, welcome to my channel. Are you preparing for your 12th commerce exams and looking to boost your confidence in accounts? Well, you are in the right place. In this video, I will cover 25 crucial multiple choice questions on accounts with detailed explanations to help you understand the concepts better. Whether you are revising for your exams or just want to test your knowledge, these MCQs will help you access your strengths and weaknesses. So let's get started and dive into the world of accounts. If you are new to my channel, request you to subscribe to my channel. First question. Abhishek and Sanju were in partnership sharing profits and losses in the ratio of 4 is to 3. They admitted Rahul as a new partner. Rahul brought rupees 60,000 as his share of goodwill premium, which was entirely credited to Abhishek capital account. On the date of admission, goodwill of the firm was valued rupees 4,20,000. Calculate the new profit sharing ratio of Abhishek, Sanju, and Rahul. So this is a very common question in relation to the partnership accounting. Now, what are the options you have? Option A, 9 is to 6 is to 1. B, 24 is to 18 is to 7. C, 3 is to 3 is to 1. And D, 24 is to 21 is to 7. So let's do a quick working around this. So Rahul got rupees 60,000 share of goodwill. So his share is rupees 60,000 divided by 4,20,000. So equal to 1 by 7. Correct? Because the goodwill of the firm was valued is 4,20,000 and he is contributing 60,000. So what is his share? It is 1 by 7. And all goodwill was given to Abhishek, right? Because it is credited to Abhishek's account. Now, profit sharing ratio between Abhishek and Sanju is 4 is to 3. That is 4 by 7 in case of Abhishek, and in case of Sanju it is 3 by 7. As all goodwill premium was credited to Abhishek, his profit sharing ratio will reduce, right? Because you are taking the goodwill. So 4 by 7 minus 1 by 7 equal to 3 by 7, right? Why minus 1 by 7? Because Rahul, his share is 1 by 7, which we calculated by determining the proportionate of goodwill he is contributing, right? Now, new ratio is Abhishek 3 by 7, Sanju 3 by 7, and Rahul 1 by 7. So indirectly, I can tell you that the 1 by 7 Rahul, what he is contributing, that particular share is coming out from Abhishek because the goodwill is completely attributed to Abhishek. So what's the answer now? Answer is C, 3 is to 3 is to 1. Question number 2. At the time of admission of partner, the balance sheet of the firms showed a workman compensation reserve of rupees 1 lakh. The claim for workman compensation was estimated at rupees 1,20,000. The shortfall of rupees 20,000 will be. Now, it is asking you that where this shortfall has to be adjusted. Option A, debited to revaluation account. B, credited to revaluation account. C, debited to partner's capital account. And D, credited to partner's capital account. So the answer is very clear. It's A, debited to revaluation account. Question number 3. There are two statements I'll read out. Statement 1. XYZ Limited was carrying on a business of automobile parts in Bangalore and earned good profits in the past years. The company wanted to expand its business and required additional fund. To meet its requirement, the company issued equity shares of rupees 30 lakhs. It purchased a machine for rupees 20 lakhs. During the current year, the net profit of the company was rupees 15 lakhs. Cash flows from operating, investing, and financing activities from the above transaction will be rupees 15 lakhs positive, negative 20 lakhs, positive 30 lakhs, respectively. There is one more statement, a different example. The patents of ABC Limited increased from 3 lakh, which was in during 23-24, to rupees 3,50,000 during 24-25. It will be taken as purchase of patents of rupees 50,000 and will be shown under cash outflow from investing activities. Now, what is the question here? So you have four options. A, both the statements are true. B, both the statements are false. C, only statement 1 is true. And fourth, only statement 2 is true. So let's read out statement 1 again to examine what should be the correct answer. So if you see here, it is mostly the question on cash flow statement, and to see that whether the amounts written here are clubbed under the different buckets like operating, investing, and financing activities correctly or not. So 15 lakh is the net profit, so it is from operating, so it is a positive flow, so it is correct. 20 lakh is on investing because the machine purchase of 20 lakh, there will be cash outflow, hence the negative cash flow is correct. And 30 lakh is the money what the company will be getting by issuing equity shares. So it is a financing activity and it is reported here as positive. In statement 2, the increase of 50,000 towards patent is shown as cash outflow in investing activity, which is correct. So as these two statements are correct, the option A will be selected here as the correct answer. Both the statements are true. Question number 4. Pawan, Kavita, Gaurav were partner in a farm. The farm was dissolved. Creditors took over furniture of book value of rupees 1 lakh at 10% less than the book value in part settlement of their amount of rupees 1 lakh. The balance amount paid to them through check. The amount paid through check will be, there are four options here: A 5,000, B 6,000, C 10,000 and D nil. So what's happening here? The book value of the furniture was 1 lakh, but at what amount it has been settled with the creditor? At 90,000 rupees. That means 10% discount is given on book value. Now, if 90,000 is settled by furniture, what is the remaining amount to be paid by cash or check? It is 1 lakh minus 90,000. So the answer is C, 10,000 rupees. Question number 5. More Limited purchased building of Y Limited for rupees 4 lakh. The consideration was paid by issue of 10% debentures of rupees 100 each at a discount of rupees 20. 10% debenture account is credited with. That means the question is on the accounting entry. What amount will be credited when you are crediting debenture account? So option A 5 lakh 20,000, B 5 lakh, C 4 lakh 80,000 and D 3 lakh 20,000. So there is a trick in this question. So what is happening? One debenture of 100 face value, you are issuing it at rupees 80 because you are giving a discount of 20, right? So how many debentures you have to issue now to match with 4 lakh rupees consideration? So it will be around 5,000 debentures, right? So 5,000 into 100, which comes to 5 lakh, right? And on this 5 lakh, you are giving 20% discount. Hence, the net amount what the supplier is going to receive is 4 lakh rupees, right? Now, what is the answer here? So it will be 5 lakh. Debenture should be accounted at the face value of 100. And the discount should be shown in a separate GL and net payment goes to Y Limited. Question number 6. The tools of analysis of financial statement which helps to access the profitability, solvency, efficiency of an enterprise is known as cash flow statement, comparative statement, common size statement, and ratio analysis. So the answer is ratio analysis. You have a lot of analysis in that, whether it is related to profitability, solvency, efficiency. In all cases, ratio analysis help to determine the correct analysis of the financial statement. Question number 7. When an analyst analyzes the financial statement of an enterprise over a number of years, the analysis is called as dash analysis. So you have option A static, B external, C horizontal, and D vertical. So the answer is horizontal. Question number 8. Excess value of net assets over purchase consideration at the time of purchase of business is A. Credited to capital reserve, B. Debited to goodwill account, C. Credited to general reserve account, and D. Credited to vendor's account. So when you are paying excess more than the net asset value, it's a loss. In that case, it goes to goodwill. But in this question, it says that whatever you're making the payment, the purchase consideration is lower than the net asset value what you are acquiring. So what will happen in that case? You are acquiring more assets, but you're paying less, right? So it is a benefit for the business. In that case, the option A, credited to the capital reserve, is the right answer, because when you get benefit, it's capital reserve. When we doesn't get benefit or we pay excess, in that case, it is goodwill. Question number 9. Quick ratio of PQR limited is 1.5 is to 1. Which of the following transactions will result in decrease in the ratio, right? Option A, sale of goods costing rupees 10,000 for rupees 12,000. B, cash collected from trade receivable 41,000. Purchase of goods for cash rupees 38,000. D, creditors were paid 11,000. So you have to be very careful while answering this question. Option A, sale of goods costing 10,000, right? So in that case, what is happening? you will have revenue increase, right? But it doesn't give any benefit in the ratio. B, cash collected from trade receivable 41,000. In that case, it doesn't give any impact because it is the movement between current asset to current assets. Trade receivable was current assets, cash also current assets. So no change in the ratio. Purchase of goods for cash 38,000. In this case, there is an impact because the cash will go out, and in quick ratio, the inventory is not considered, right? So it will be one side impacted. So the cash will go out and your current assets will reduce. In that case, the current quick ratio will impact and it will impact negatively. Creditors were paid 11,000, so your current liabilities will reduce. In that case, the ratio will go up. So what is the correct answer here? Purchase of goods for cash 38,000. And what is the formula for quick ratio? Quick assets divided by current liabilities. So payment for purchase of goods will reduce the cash balance and the ratio will decrease. Question number 10. Those debentures where a charge is created on the assets of the company for the purpose of payment in case of default are known as. So it's more about what type of debenture it is if it has charge on the assets. A. Secured debentures. B. Registered debentures. C. Specific coupon rate debentures. And D. Redeemable debentures. So as this debenture has charge on the assets. That means in case of default, the debentures holders can sell the assets and take their money. So in that case, the answer is A, it is secured debentures. They are secured by the assets of the company. Question number 11. Why Limited invited applications for issuing 1 lakh equity shares of rupees 10 each at a premium of rupees 8 per share, right? So 10 plus 8 is a total of 18 rupees to be collected for each share. The amount per share was payable as follows: on application rupees 8 per share including 5 premium, on allotment rupees 8 per share including 3 premium, and on final and first and final call it is balance amount. So application for 1,50,000 shares were received. Mohan, who had applied for 4,000 shares, paid the entire share money. That means at the time of application money itself, he has paid for all the 4,000 shares complete amount, right? That is 18 each. The application money received was, so you have to calculate what is the total application money the company has received. So you have option A 12 lakh, option B 8 lakh, C 12 lakh 40,000, and D 10 lakhs. So what is the answer here? The answer here is C 12 lakh 40,000. And how it is calculated? The money received is for 1,50,000 shares multiplied with 8, so it is 12 lakh rupees, right? Because on application the money collected is 8 rupees per share. But what has happened? There is one shareholder who is Mohan who has paid extra. And how much extra he has paid? He has paid for the allotment money of 8 rupees plus final and first call money, that is 2 rupees, right? So Mohan has paid extra 4,000 shares into rupees 10, that is 40,000. So 12 lakh plus 40,000 is 12 lakh 40,000, which the company has received. Hence answer C is the correct answer. Question number 12. If the current asset is rupees 4 lakh and the current liabilities is 2 lakhs, then what is the current ratio? So option 1, 2 is to 1, option B, 1 is to 2, and option C, 1 is to 1, option D, 2 is to 4. So what is the correct answer here? It's A, 2 is to 1, because the current ratio formula is current assets divided by current liabilities. Here the current assets is 4 lakh divided by 2 lakhs. So the answer is 2 is to 1. Next question, question number 13. Which are the below items being part of financial statement? Option A, ratio analysis. B, profit and loss account, balance sheet and cash flow statement. C, working capital movement. D, sales variance analysis. And the correct answer is B, profit and loss account, balance sheet and cash flow statement. Question number 14. Ratios are calculated for measuring the efficiency of operations of business based on effective utilization of resources, are known as option A, liquid ratios, B, turnover ratios, C, solvency ratios, and D, profitability ratios. So when it comes to utilization of resources like net asset turnover ratio, or you can say debtors turnover ratio, inventory turnover ratios, in that case, it is turnover ratios which helps in checking or calculating the effective utilization of resources. Question number 15. At the time of dissolution of a firm, creditors are rupees 70,000, Firm's capital was 1,20,000. Cash balance 10,000. Other assets realized 1,50,000. Gain loss in the realized account will be. You have option A 30,000 gain, B 40,000 gain, C 40,000 loss, and D 30,000 loss. So let's do the working here quickly. The total liability is creditors 70,000 plus capital 1,20,000. Hence the total liability is 1,90,000. And when it comes to assets, you have a cash balance of 10,000. So what is the meaning of that? So total assets which were sold is rupees 1,80,000, right? Because 1,90,000 is the total liabilities, cash in hand is 10. So the difference is 1,80,000. And this 1,80,000 has been sold, and what amount the firm has realized? It's 1,50,000. So what is the net? The net is a loss, right? Because 1,80,000 asset has been sold for 1,50,000. Hence the answer is D 30,000 loss. Number 16, Ram Limited issued 80,000 10% debenture of rupees 100 each at certain rate of discount and were to be redeemed at 20% premium. Okay. Existing balance of securities premium before issuing of this debenture was rupees 25 lakhs, and after writing of loss on issue of debentures, the balance in securities premium was rupees 5 lakh. At what rate of discount these debentures were issued? So it's a complete tricky question. You have to find out the discount rate at which the debentures were issued. So there are four options. You have to select the right answer out of that. A 10%, B 5%, C 25%, and D 15%. So let's do the working quickly to understand what option is correct. Total premium to be paid is 80,000 debentures at the rate of rupees 20. So it is 16 lakhs, right? Because you are going to issue these debentures or redeem these debentures at 20% premium. This premium will be adjusted against securities premium account balance. That is 25 lakhs what you have. Balance outstanding after above adjustment 25 lakhs minus 16 lakh is rupees 9 lakhs, because when you pay the premium of 20%, it has to be adjusted from this 25 lakhs. So the balance is 9 lakh rupees. Now, as per the question, the net balance in the securities premium is rupees 5 lakh. That means what? The 4 lakh from 9 lakh to 5 lakh, that 4 lakh is nothing, is the discount what is given to the debenture holders. So discount per debenture is 4 lakh divided by 80,000, that is rupees 5 per debenture. Hence the discount percentage is 5 by 100 is 5%. So the right answer is 5%. Question number 17. Vision Limited invited application for issuing 6,000 equity shares of rupees 10 each at premium 10%. The issue was fully subscribed. The amount per share was payable as follows: on application rupees 3 per share, on allotment rupees 3 per share, including premium, that is 1 rupee, and on first call rupees 3, and on final call rupees 2. As is the holder of 200 shares paid the entire money along with allotment, the total amount received on allotment was, so you have to find out what is the allotment amount the company has received. Option A 18,000, B 19,000, C 25,000, D 21,000. So what's happening here? 6,000 shares into 3, because during allotment, what is the amount you are going to collect, including the premium? It is rupees 3. So 6,000 shares multiplied with 3, the amount collected is 18,000. Now, there is one shareholder, Assis, who has paid extra, right? What he has done? He has paid the remaining amount as well. That means on first call, there is extra money to be collected is 3. On final call is 2. So 3 plus 2, 5. So he has paid extra. So 200 shares into 5 equal to 1,000 rupees. So what is the amount the company has received in total? 18,000 plus this 1,000. Hence B 19,000 is the right answer. Next question, question number 18. From the following, calculate interest coverage ratio. Net profit after tax is 12 lakhs. 10% debenture 1 crore. Tax rate is 40%. And the options are 1 is to 2 times, B 3 times, C 2 times, and D 5 times. So answer here is 3 times. So interest coverage ratio formula is that net profit before tax divided by interest cost. Here the tax rate is 40%. Hence profit before tax is 12 lakhs divided by 60%, right? Because after 40%, the remaining is net profit after tax. So 12 lakh divided by 60% is 20 lakhs. So interest coverage ratio equal to 20 lakhs plus 10 lakhs, because I have to exclude the interest on debenture of 10 lakhs. Then only I will have the amount what is available for covering the interest, right? So 20 lakhs plus 10 lakhs, 30 lakhs divided by 10 lakhs. What is here 10 lakhs? It is the interest what you're going to pay for the debentures. So it is 3 times, right? So here there is a strict mark. What he says that 10 lakhs is the interest cost on debentures. Net profit before tax should exclude the interest already deducted from profit. So the interest is already debited from the profit. So that you have to exclude, and that has to be considered as numerator and then divided by the interest what to be paid. So it is 3 times. Question number 19. Dividend received by other than financial enterprise is shown in cash flow under what? Right? Option operating activities, B investing activities, C financing activities, and D general activities. So answer is investing activities, because when you invest in the stock market and you get dividend on that, so because you invest in a stock market, it is a investing activities. Any return on that is treated as investing activities. Next question number 20. Raman Limited was registered with an authorized capital of rupees 5 crore divided into shares of rupees 10 each. The company offered for subscription 4 lakh shares. Applications were received for 4 lakh 50,000 shares. Application for rupees 50,000 shares were rejected. A shareholder holding 10,000 shares failed to pay the first and final call of rupees 2 per share. The subscribed capital of the company is option A 5 crore, B 40 lakhs, C 45 lakhs, and D 39 lakh 80,000 rupees. So in the previous examples, we are talking about extra money received. In this case, the money is not received. So it will be a reverse case. So what is the answer here? The option D is the right answer, 39 lakh 80,000. And how it is calculated? 4 lakh shares issued at the rate of 10. So the money received is 40 lakhs. Now, there is a shortage of receiving of money as well, right? So less short paid by a shareholder. He's holding 10,000 shares at the rate of 2 per share not received. So that is 20,000 rupees. So 40 lakhs minus 20,000 is 39 lakh 80,000 is the right answer. Question number 21. Suvo Limited purchased a machinery of rupees 3 lakh 80,000 from Ganpati Limited. The payment was made by issue of 3,000 shares of rupees 100 each at a premium of 10% and the balance by issuing a check. The amount of check issued in favor of Ganpati was, so we have to find out what is the amount of check issued to Ganpati. A option 80,000, B 3 lakh 80,000, C 30,000 and D 50,000. The answer is 50,000. Why? Because the shares issued is 3,000 shares at what price? It is with 10% premium. So each share is 100 plus 10, 110 rupees. So the total shares issued is 3 lakh 30,000 rupees. The asset value is 3 lakh 80. The difference between 3 lakh 80 and 3 lakh 30 of rupees 50,000 has to be paid through check. Question number 22. Interest paid on loan is shown in cash flow statement under which category? Option A, operating activities, B, investing activities, C, financing activities, D, general activities. So loan is financing because you are taking loan for funding your company. So any interest paid on the loan is treated as financing activities. So option C is the right answer. Question number 23. Shares issued as sweat equity can be 1. Issued at par, 2. Issued at discount, 3. Issued at premium. Which of the following is correct? So options are here. A, only 1 is correct. B, both 1 and 3 are correct. C, all are correct. And D, only 2 is correct. So when it comes to sweat equity shares, all the options are possible, right? So the answer is C, all are correct. Question number 24. From the following, calculate the net asset turnover ratio. Shareholders fund 18 lakhs, 8% debenture 2 lakhs, reserve and surplus 5 lakhs, revenue from operations 75 lakhs, average total asset is 20 lakhs. So what are the options you have? A 3.75 times, B 2.5 times, C 3 times, and D 4.14 times. So the answer is 3.75 times. Net asset turnover ratio formula is revenue from operations divided by average total assets. So here revenue is 75 lakhs and the average total asset is 20 lakhs. Hence the ratio is 3.75 times. Now coming to the last question number 25. At the time of dissolution, machinery appears at rupees 10 lakhs and accumulated depreciation for the machinery appears at rupees 6 lakhs in the balance sheet of the firm. This machine is taken over by a creditor of rupees 5,40,000 at 5% below the net value. The balance amount of the creditor was paid through bank. By what amount should the bank account be credited for this transaction? Right? So what are the options you have? Option A 60,000, B 1,60,000, C 5,40,000, and D 10 lakhs. Right? So what is the answer here? Let's start with the workings. Net asset value 10 lakh minus accumulated depreciation. So the net value is 4 lakh. The asset is taken over by the creditor at 5% discount. So 4 lakh is the value at 5% discount. The net value at what the creditor is taking over is 3,80,000. Total creditor value is 5,40,000. Asset taken over is 3,80,000. Hence the balance amount, right? 5,40,000 minus 3,80,000, 1,60,000 will be settled through check or bank. So the answer is 1,60,000. So this is the last question. Hope you like these questions. If you have any specific query, then put the question in the comment box. I'll try to answer. Or if you want me to make certain questions on certain topics, then let me know. I'll prepare the questions and answer for those topics as well. Thank you for watching this video. If you have not subscribed to my channel, request you to subscribe to my channel. Thank you for watching this video. Bye bye.